So wow, so it's preceded the 1031 tax exchange law by 67 years?
66 years.
In 1913 this tax law was put into place?
The term dealer was inserted in tax law when the laws were created, which was 1913 by Congress.
Now, have there been any cases where this has been challenged in court?
Not to our knowledge. Well, not challenged. I will tell you this, that there was one case, and this was back in 1995, where the client who did this had a general audit done by the IRS. It just did not trigger the audit, but it was reviewed, and they had absolutely no problem with it. Why? Because it's simply an installment sale based upon the Section 453 of the Code, which was put in law in 1913. It's just that the sale was made to a dealer. That's the only difference.
So it's just structure.
It's just structure.
So it's using the existing tax law that exists there, and it's just how it's being organized.
It's how it's being structured, how it's being applied.
How it's being applied, and that's why the IRS is fine with it.
Well, they certainly have been so far.
Fantastic, fantastic. So if somebody wanted to investigate this as a means to selling, let's say they have a property that's worth $1 million or more, and they're maybe what's been keeping them from selling that property has been the fact that they don't want to pay the capital gains on, let's say it's a married couple, so they're looking at a cap gains tax bill of at least $500,000 or more. And they wanted to get more information about this. How would they go about doing that?
Well,
and what's your normal protocol?
Okay, if we're talking about what I do, what I would suggest we do is what I call a pre-sale tax and income analysis.
That sounds expensive.
It really does, doesn't it? But actually I do it at no cost.
Really?
And the reason I do that is in the 42 years that I've been in business, I've always believed that I need to have a way of earning the right to serve that client. In all these years I've chosen that way to earn that right. So I will do the analysis on any number of properties up front at no cost. Now what the analysis does is very educationally fueled. It's really important that the property owner understands, first of all, if they were to sell the property absent proper planning, what they would net out after cost of sale and the mortgage being paid off, if any, what they would net out after all those expenses, and what a realistic amount for income would be derived from the net sales proceeds after all those expenses.
So is that like, if I'm hearing you correctly, it's like a forecast as to if you were to sell your property without doing anything? So if I'm hearing you correctly, you said that in essence what you're doing is forecasting what it would be like if I do nothing at all and just traditionally sell my home, what the tax bill would be, as opposed to having 1, 2, or 3 solutions that you could customize and tailor fit to me, and then I get to pick 1, 2, 3, whichever I think is.
You're absolutely right, but let's look at it from a different perspective.
Okay.
What most people encounter in the marketplace is one person with one agenda, and that's all they're pushing. And everybody and anybody out there is a prospect for that deal. Okay. Now that deal might be great, but it's certainly not right for everybody, is it?
No, of course not.
Right. So what the pre-sale tax and income analysis does is exactly the opposite of that, and that's why I designed it that way 22 years ago. So for the property owner, we first of all identify what the tax problem is if they were to sell without doing proper planning, what they would net out after all the costs of sale, the taxes being paid, and what that would translate into realistic income for them. And then contrasting that are the most viable choices supported by tax law, tailored to their individual circumstances, and how that would maximize their profit and income. So what does that do? It allows the property owner to see what all their real options are, how they structurally fit them in their specific circumstances, and then they can choose what they're most comfortable with, because any of those choices are going to do the job for them. And that would give them the confidence to go ahead and move forward with the sale of the property, because they already know beforehand exactly what to expect, and that's supportable under law.
Wow, that sounds awesome. Now, that's very exciting news, I think, for not only real estate investors, developers who also are on the investment side of real estate, and so forth, but also for homeowners who have highly appreciated primary residences where you have cap gains. But I know not only from myself, but also my client base that I've had since 1986, that usually we're pretty, you know, after a certain amount of years, you get pretty much married up to the professionals that you have in your transaction team. So, you know, your accountant and so forth, and your attorney. So I really don't want to replace my CPA. He's phenomenal, and so you know, are you able to work in conjunction with them, or would I have to use? I mean, you're not a CPA, are you?
Never went to the dark side.
I never went to the dark side.
No.